Last week was absolute chaos in our market as Bitcoin and many well-known altcoins crashed to their lowest price levels in years. Over the past 24 hours, however, cryptocurrencies have partially recovered some of their losses, and in today's video we will look at the positives that remain after the crisis. We'll also see why this week may bring additional volatility, and we'll reveal what strategy plans to do next. Like, subscribe and comment, and let's go! Bitcoin, whose price collapsed to around $59,000 a few days ago, has recovered to the current $63,000. Ethereum is struggling to reach 1,700, while Zcash and Near jumped by 8–9% on a daily basis. The best performing cryptocurrency today is the little-known Audiera, ticker BEAT, whose price exploded by 110%. A serious pump, but be careful with such tokens that don't have much fundamental value, which means their prices can crash within minutes and leave investors empty-handed. There are also cryptocurrencies that remain in the red, such as Internet Computer, Algorand, Stellar and Avalanche. The total market capitalization of the crypto sector has risen to around $2.24 trillion. Bitcoin's price crash last week was more than serious and likely scared a large portion of market participants. The asset fell to levels last seen in the fall of 2024, shortly before the crypto president Donald Trump won the US elections. Still, let's see why the situation may not be as bad as it looks at first glance. To begin with, we'll look at the Bitcoin's relative strength index, which on Saturday dropped to 15.5, its lowest point since the COVID crash in 2020. This means the asset entered an extreme oversold zone, which has often preceded strong recoveries in the past. In simpler terms, sellers have exhausted their strength and the market has fallen into a state of panic, which in the past has almost always been temporary. When the RSI drops this low, it doesn't indicate a normal decline, but rather an extreme emotional reaction in which many participants sell not because they want to, but because they are forced to, by liquidations, fear or automatic stop orders. In other words, the market has overreacted to the downside. And when that happens, a period of stabilization often follows because panic cannot last forever, leverage gets flushed out and selling pressure decreases, while long-term investors usually don't sell in such moments. The next factor we'll examine is Bitcoin's Fear and Greed Index, which plunged to extreme fear at a value of 8 out of 100. We've seen such readings only during the most extreme shocks in the crypto market, and they generally mean that most participants have already capitulated. Usually, after such a peak in fear, the market begins to look for a bottom and stabilize. One of the main reasons for last week's crypto market crisis was Strategy's sensational decision to sell 32 bitcoins as part of an internal technical process. Investors panicked that the company might start unloading part of its massive BTC reserve after years of repeating that it wouldn't sell a single coin, but only days later the situation flipped completely. Michael Saylor posted an interesting signal on X, which traditionally suggests that Strategy is preparing for a new large bitcoin purchase, something that could calm the market. Of course, not everyone is impressed. The well-known Bitcoin critic Peter Schiff reacted sharply, asking, "Where will the money come from for the new purchase? Will you deplete what remains of your cash reserves? And if so, how will you pay the dividends on the preferred shares?" This question is completely logical given that Strategy is already under pressure due to its large unrealized losses and the need for liquidity. After the chaos around Bitcoin, Ethereum also experienced its own crash, dropping to around $1,500, a level we hadn't seen in months. However, there are several good news items for the second largest cryptocurrency that may give investors some hope. According to analysts closely monitoring the market, the drop was accompanied by a sharp increase in volume, which often suggests that sellers have been exhausted and the market is starting to look for a local bottom. On-chain data also looks encouraging. A large amount of ETH has been withdrawn from exchanges in recent days, which usually means investors prefer to hold their assets long-term rather than sell them. This is a positive signal because it reduces market supply and can help stabilize the price. In addition, the number of active addresses and transactions in the network remains stable, showing that Ethereum's fundamental activity has not been affected by the price crash. The whales also did not sell aggressively during the drop. On the contrary, some of them used the moment to accumulate more Ethereum. This suggests that big players expect a recovery, though not immediately. And finally, let's see which events may move the crypto market this week and why volatility may remain high. The first important event comes tomorrow, when the US PMI indexes for services and manufacturing will be released. These data provide an early picture of the state of the economy and often influence expectations for future Fed rate decisions. Weaker results can support the crypto market, while stronger ones may push it down. The biggest event, however, is on Wednesday, when the May CPI inflation report comes out. This is the key moment of the week because inflation remains the main factor determining whether the Fed will cut rates later this year. If CPI shows cooling, it could give a strong boost to Bitcoin and other cryptocurrencies. But if inflation turns out higher than expected, the market will likely react with another drop. On Thursday, the weekly jobless claims report comes out, which can also bring short-term volatility, especially if the report surprises the market. The last factor is ETF flows, which remain unpredictable. If we see a return to net inflows, this could stabilize Bitcoin, but if outflows continue, downward pressure may intensify. That's it for today, gang. Have a great and successful day, and see you tomorrow.